Welcome, everybody, to Trading Coach's Playbook. Hello, Brenda. Glad to see everybody's joined us. And it is the noon hour, so we will get started. Of course, with the old disclaimer. Of course, this is all about education, so nothing should ever be seen as advice or recommendation. Since it is about education, of course, any trades we talk about should always be considered non-funded. Don't forget that trading does involve risk, so we want to limit that as much as we can. And Freedom Management Partners personnel are not subject to trading restrictions. All right, what's on the calendar? Hello, there we go. Of course, we got Inner Circle on Mondays per usual. Next one's on the 3rd. We'll get a guest appearance by Rob for that one. And then Tuesdays is Mastermind Group. Next one's the 4th. Next Thursday, we'll have Q&A with Tony about patterns in a flash. And then week after next, we'll start trading you again with our next iteration on the 10th. And then the one after that on the 17th, because I think Rob actually mentioned this in Monster Market Movers with the holidays in November and December, we kind of squish those months a little bit. So we don't have quite as many days to work with. All right. And then, of course, our free stuff. We got Power Hour on Mondays. We've got this Trading Coaches Playbook on Fridays. And then cranking up next week is another set of free classes from Brandon. And these will be about his SPX cash flow, kicking booty. Hey, Will, I'm not sure what that period is for, but hey, I feel like I just saw you. For those of you that don't know, Will is in Inner Circle, and we do our training lab on Friday mornings. All right, and of course the what I like to call the greatest hits. We got power option plays, E-mini think tank, and covered call explorer. It's always something, isn't it, Will? All right, and then of course we've got our follow us page where we can go find all the cool free stuff on the various social media platforms, as well as getting the Trading Post newsletter, which you can go check out on Beehive, or you can have it delivered to your email. So that is cool. All right. So, what do you think? Give me some candy. Happy Halloween to everybody out there. So, we'll get started as we usually do. If anybody's got any questions or comments or mention something they want to mention, just throw it in the chat. We don't do that this much at the beginning of this class, but we do in some of the others that I teach. While everyone's furiously typing on their keyboard, we'll move on to our next piece, which is, of course, our review. So let's review, take a quick look at the SPX. And of course, I didn't do an update. So we had, of course, we filled part of that big top gap in the SPX yesterday. And then let's go over here and we can see where. So we started to fill that gap and then we went sideways and we finished a little lower. And then of course earnings. We had a lot of earnings on Wednesday night and Thursday night. Had a big pop, big gap up today. Gave a bunch of it back, then gathered it back up, and now we're headed back in the other direction. So, and of course, everybody's, well, why did it do that? Well, I don't know. When somebody, as I like to say, when you get your crystal ball, make sure you share it with all of us, okay? So, but there's a lot going on. And we'll talk about some of it in just a minute. But, there's a lot of geopolitical stuff going on, a lot of deals being made. Oil prices are falling and energy companies are making high profits. So that's kind of counterintuitive, but that was one of the articles in the Trading Post this morning. But of course, the other piece we want to look at is actually, let's do this. We want to look at VIX. So of course we've got uh, um, yesterday we had a move up, but it still finished slightly lower than the day before. We're still 1690 ish. So we're at the top part of the bottom third. As I've said many times, I like being up here in the 18s, 19s, maybe even 20. But 16 is good. I dislike very much the 13s and 14s because it's very hard to find premium. Why is it not as important as when it going to that next? I'm not sure what that. Okay, Will. Anyway, and then we'll take a quick peek over here at our VIX. Hello, hello, hello. Okay, it's not going to do it, so we'll do it the old-fashioned way. And hurry up and wait. Hurry up and wait. So anyway, the VIX is not moved probably appreciably yet today. It's probably gone up and down and landed about where it was, as has the rest of the market. So go back to the slides. And actually, what I'm going to do is I'm going to pull this down here in case it pops. But with our review, yeah, I mean, there's just a lot of stuff going on, and a lot of that is earnings. This is something else I've started doing in a lot of my classes, especially this time of year, which is tis the season, as I like to say. And I get an email from Earnings Whispers every Saturday, and this is last Saturday, so all these have already done. But look at that, and that's just a smattering. That's not even. There's two, 300 announcements every day. This week, next week, we start to get into the next week after that. It starts to dwindle a little bit, get closer to, 100, 100 and a half, and then it just dwindles off from there. But we're in what I call the crux of it all, the very uh, uh, um, the part of the earnings cycle where we see a lot and a lot of big ones like look at that. Meta, Microsoft, Alphabet, Chipotle, Fiserv, Etsy, and that's just Wednesday. Yesterday was Amazon, Apple, Coinbase, Reddit, Riot Strategy, Roku, so lots and lots and lots. And we've got before, remember there are before market and there are after market. So those kind of do different things. But Chevron and Exxon had good announcements. I don't know how they reacted. I hadn't looked yet, but I know they had good announcements, good earnings anyway. So anyway, something to keep your eye out for. As we know, we always want to make sure that we know as much about the environment that we're trading in as we possibly can, and part of that is earnings. And you can trade earnings or you can stay away from earnings, and that kind of depends on what is your everybody knows this. You've heard me say it 1,000 times, right? What's your trading style? What's your risk profile? So, you as a trader, where you decide what these things, how important these things are to you. Maybe you're willing to deal with a little bit more risk for an opportunity for a big pop. Maybe you're not. Maybe you're a little bit risk averse. So, you want to stay away from things like swing trades during earnings. Um, when I'm doing scalps, earnings is not that big a deal. Sometimes it can actually help, but you do have to watch your volatility and you have to watch your bid by ask spreads because those things can get pretty wacky right around the actual earnings announcements. Yeah, exactly, Will. So anyway, what I thought I would talk to everyone about today, as the title says, trust your gut. So, the key to following your instincts is simply having the courage to trust yourself, right? So again, let's see. So Jim says Chevron's up 3.6 right now, and Exxon is actually down 1.23. So there you go. Thanks, Jim. Um, and anyway, this came up. I want to give full credit where credit is due. She's not in here, but I got this idea from Amelia when we had our inner circle quarterly last this time last week. We were talking about some things. Rob and I were kind of talking about things as educators. You know, how do you get some of the things out of your head and explain it to people? And um, Amelia said Blink, and that is a book, and we'll mention. I'll go into that in just a little bit. But what we're really talking about is intuition. So, what is intuition? So, intuition is the ability to understand or know something immediately without need of conscious reasoning or explicit explanation. That's a mouthful, isn't it? It's often described as gut feeling. Trust your gut, right? That arises rapidly from stored knowledge and lived experience and can influence decisions or judgments in a subconscious manner. So it involves quick, effortless judgments that are not the result of deliberate logical thought. So it just kind of happens, right? It is informed by past experience, emotional cues, pattern recognition, often operating at the edge of your consciousness, of your conscious awareness. And intuition is something described as the brain's way of processing stored information and bodily signals quickly to aid decision making, particularly in uncertain or complex situations. So, would everybody in here agree that trading is an uncertain and complex situation? So, we are definitely going down that road. So a lot of this comes from a book by Malcolm Gladwell, and it's called Blink: The Power of Thinking Without Thinking. And it's that gut feeling that you see something and your subconscious, your inner workings of your human brain can give you an idea to do something before you actually look at all the variables and logically think through it and decide, hey, this is what I'm going to do. Both of those approaches are very valuable in all different kinds of situations. But what I wanted to talk about today is how we can use that gut feeling in trading. So, in the book Blink, what Malcolm Gladwell talks about is exploring how our minds make quick subconscious judgments. He calls it thin slicing based on limited information. And of course, the information is all there. It's just you haven't gone through that logical process yet. Gladwell argues that these rapid decisions are often just as good or better than those made after exhaustive analysis, but they can also be corrupted by biases and stereotypes. So you want to be careful, right? Thin slicing is our ability to infer a conclusion from a narrow period of experience or tiny bits of data. Spontaneous decisions can rival or exceed deliberate ones, whether in advertising, speed dating, sports, or even trading. So, expert judgment is often powered by the adaptive unconscious, but it's vulnerable to the prejudices and psychological priming. So, again, you have to be very careful with it, but it can also be very helpful. Too much information can lead to analysis paralysis. Anybody ever gone through that? You know, I hope everybody's raising their hand. I definitely have. It was one of my Achilles heels when I first started trading. I was a I'm a very analytical person, you know, programmer, computer programmer by trade. So that definitely puts me in that boat. And sometimes you kind of, I had a hard time pulling the trigger because I just wanted to analyze everything to the nth degree. And by the time you get through with that, the trade's gone. So, and sometimes experts make better snap decisions than those made after extensive review. And the more that I trade, the more experience I get, the more I trade the same things over and over again and really get a feel for how they work, some of this becomes very helpful. Yeah. Will says I had to learn to draw chart lines like crayon lines. Yeah, exactly. It's a journey. And you have to start. Once you start, you got to keep going. Um and you can learn a lot about yourself if you pay attention to what's happening. So, intuitive judgment is formed by experience, training, and knowledge, but unconscious prejudices like the halo effect can mislead us. So, that's again, you want to be careful. Sorry, let me put this over here. Squirrel. Yeah, I'm very much like Tony. I get distracted easily. So, and that's really where it comes into, and we'll talk about this more in depth in a minute, but this is where it comes into the trading world where you're experience trading, your training and education in classes like this, and your knowledge of how the market works, and your experience and knowledge of, say, AMD, right? That's my one of my bread and butter stocks. So, yeah, this can be extremely helpful. So, oops. Okay, so we got a straggler there. I got my my animations out of order. But so in blank, um Gladwell talks about he gives a couple of different examples. I want to get these right. So the Getty Koros story is a, was a he was a museum expert that spent 14 months authenticating a Greek statue. Yet seasoned art historians realized within seconds that it felt wrong. And it turned out they were right, and that's where you see something and it doesn't look right, but you can't really put your finger on why it doesn't look right. That's intuition. That's instinct. That's blink. Also, psychologist John Gottman was able to predict relationships and how successful or not they might be within just a few minutes of sitting down and talking to couples. And this was his experience and knowledge, again, blank. But he also gives examples of being very careful, like a shooting incident that happened, I believe, in New York. Was it? Yeah, New York police officers mistook Amando Diallo's wallet for a gun. So they thought they saw something, but they didn't. And I'm not going to get into what might have been going on in their brain, but there was definitely some sort of either a bias or a stereotype or something else, just something in their brain saw that and said that's a gun, and he did not work out for Amando. Um, so snap decisions can be as accurate as deliberate ones, especially for experts trained to recognize patterns. And this is where you want to get in the simulator. If you're new to trading or newer to trading, or you're learning a new strategy that you've not used before, you want to get in the simulator and do it a lot, because that gives you that experience without costing you any money. And then you can start to get into doing live trades, and you want to ease into that. You've heard me talk about it. You've heard Ryan talk about it. You've heard Rob talk about it. Brandon, Tony, everybody. So again, quick judgments can mislead when influenced by prejudice, stress, or excess information. So you wanna be careful that you understand what you're doing and why you're doing it, and you can do that a lot by a review after the fact. Intuition can be developed. Gladwell suggests that awareness, experience, and training improve its reliability. Exactly what I was talking about. You want to be aware of it, so this class will help you become aware of it. Then you want to use your experience and training with your education, with pressing the button and being in the simulator and doing trades in that simulated environment to improve your ability, your intuition, and your ability to use it. So, time slicing for expert traders, you can use this to identify patterns in a blink. And that's where the title comes from. Sometimes outperforming slower conscious analysis, but only when well trained. This is where you see Rob and Tony and myself and others go through charts, and you'll see, and as a teacher you want to teach the student this is how it works, but we've only got a set amount of time. So then you see it gets faster and faster, and then you'll see, like Tony will go, this is what I do, for in 20 minutes every night, and he'll go through 100 charts, just bang 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 bang. He's making those split second decisions, and Rob does the same thing. I do the same thing. A lot of traders do it, and it's where you know the strategy or maybe strategies that you're looking for, and you can see almost immediately the pattern is there, the setup is there, or it's not. And you can go through those charts. The more you do it, the better you get at it, and the faster you get. Um, yeah, like playing a piano. You don't think where your fingers are going exactly, Will. So yeah, and it's very much like some of those things that are just instinctive from training. They're not instinctive right off the bat. Practice and priming, years of screen time and reviewing market conditions, strengthen pattern recognition and gut accuracy, and that's what you're looking for. Uh, Watch out for overconfidence, stress, and bias that can trigger poor snap decisions, like chasing costs, lessons, ignoring risk signals, like volatility increase, or a market maker sucking all the volatility out of an option price all the time, all the theta. So yeah, these are some of the ways that you can use these concepts in your trading. So, and self awareness. I'm a big believer in this. And Gladwell emphasizes cultivating awareness of those biases, your emotional state, and your context. And this is where journaling comes in. We'll talk about this a little bit more later, but this is where the whole rinse repeat, where you are not just, you've seen my presentation on, I think a lot of you have, I don't know if I've done it in here yet, I think I did, on evaluation, and I call it re-evaluation because it's not a one-time shot. You do it over and over again, but you need to at least do it once so that you can become aware, self-aware of all the different things. And then your journals are very much like charts. They will show you patterns of yourself and your behavior. You want to learn to recognize those patterns and then use them to your benefit, right? And if you find if you find patterns that are not to your benefit, you want to try and change them, right? And successful traders often blend intuition with analysis. And this is where you get the best of both worlds. You kind of, you probably start with a lot more analysis, and the more you do it, it becomes more intuitive, but you always want to use both as much as you can. And sometimes you might have a little bit longer and you can use a little bit more analysis to prepare for your trade. Like when you're looking at candidates at night so that or in the morning, so you can prepare yourself before the market opens. The intuition and the instinct is really more about, for me, it's about scalping. And that's where I have used this to my advantage, to my benefit, to become a better scalper. Yeah, watch out for AI, exactly. So I just like this slide. That moment when you make your first profit trade on the live account. But I'm using this to kind of lead more into what we just got finished talking about is trading, because that's what we're here to learn about, right? So instincts for trading, it depends on your experience levels, and these are you develop those reliable instincts as you progress through your experience levels. So obviously beginners should establish clear rules and use intuition modestly, very little. Developing traders can start to incorporate more intuition, but you have to validate it with data. So that's where you're kind of doing both instinct and intuition, and you're doing a lot of review to make sure that your instincts are correct. And for the experienced traders, intuition can become a valuable edge, but should be regularly tested and reviewed for accuracy. So you don't ever stop reviewing and reevaluating everything that you're doing as much as you can. Now, obviously, you don't want to overdo it, but you want to do it regularly. It can be weekly, it can be monthly, it can be quarterly, all the above. And so traders' intuition evolves over time through discipline and learning from markets. And also understanding something that I didn't put in the slide is the fact that those markets change. And the more you do this, the more you will be able to instinctively see those changes before maybe other people do. So, what about psychology? And I got another straggler coming up on my animations. Think I copied these slides and didn't go back and review my animations. But anyway, so emotional influence is part of your psychology. You've got emotional influence, you've got cognitive biases, and you've got discipline versus instinct. And what you're looking at is, of course, fear, greed, stress, and impulse with your emotions. And of course, you've probably heard me. I say there is no greed. It's there's only fear. And what greed is fear of missing out. But that's me. You can use it if you want. And then, of course, your cognitive biases, whether it's confirmation, loss aversion, recency bias. Like if you've had several trades go against you, my rule is three strikes and I'm out and I'm done for the day because something is going on, whether it's in my head or maybe I didn't get enough sleep or maybe there's something distracting me, whether it's something family, personal, something else. So you get that recency bias, and you either recoil, like if you have a bunch go against you, you either recoil, which can be a good thing as long as you're learning. But some people will say, "I'm going to get you. I'm going to get you," and you revenge trade and you get yourself in trouble. So and then of course we've got discipline versus instinct, where you've got structure and rules, which are very, very important, but you also have those gut-driven decisions. And this is where we want to learn how to use intuition and instinct to better trust our gut and make better gut decisions, right? And then, of course, self awareness, where you want to recognize emotional and cognitive drivers during real trades. So you begin to recognize some of this stuff while you're in the middle of it. And this is where journaling can become very important because you might recognize it and you might forget it. So you want to write it down as soon as you can. You don't necessarily have to write it down right then, but you want to write it down as soon as that trade is over, um, or as soon as that situation is over. And then, of course, more on psychology. Our conscious processing can make effective decisions. Our unconscious processing can make effective decisions quickly, especially under pressure. And that's where it really becomes useful as long as you can trust it, right? And gut reactions are stronger when supported by experience. And this is where beginners need more structure, while experts can leverage that intuition a little better. And, be careful. Gut feelings are situation dependent and sometimes counterintuitive, especially in volatile markets. So you just want to be aware. This is all about awareness. You want to be aware of all this and use it to your advantage, or maybe choose not to use it. That's fine too. So, one of the things we talked about in Trader Super Summit, for those of you that were not there, we talked a lot about risk profile. And in the inner circle, we actually spent 4 weeks going very, very deep into this long list of questions that Rob gave us on determining your risk profile. And this is where intuition and instinct can become part of your risk profile. What is your individual risk tolerance? And how can you personalize those gut decisions for that? Risk tolerance is shaped by personality, finances, experience, and emotional resilience. Key factors can be age, account size, financial security, experience, emotional temperament, stress coping. So all these different things can relate back to your risk profile. And traders must know their own limits. Trusting your gut in the face of risk is only effective if you understand and accept your tolerance for costs, lessons. I use the L word a little too many times in this. Oh, not yet. This is where you are figuring out your gut and personalizing those things according to your risk profile. So maybe you are very risk averse. It is, isn't it? Um, and so maybe intuition is not your best tool, but also maybe with some more experience and some more training, you can get past that and use it to your advantage. Maybe you never will. It's this is where trading becomes so individualized between everybody. So you have to really know yourself. I forget where I heard it. I won't take credit for it, but I like to say that trading is 80% psychology and 20% economics. And that's, I mean, it's pretty true. You look at it, you can learn the economics, you can learn the fundamentals, you can learn the technicals. All that stuff can be learned. The psychology kind of comes with you, right? So you really have to work on that sometimes. So here's some trading tips from all of this. So what about how can we practically use this for trading? So make sure that you balance your intuition and your analysis. Traders should listen to their gut but validate it with structured review and data. So this is, again, same things reviewed over again, but you want to find that balance for you. And then of course, self-assessment. I'm a big believer in this. Journal your gut calls, analyze your outcomes, and pair intuition with performance metrics. So you always want to collect your data, period. You never want to pass on that. But there are other things that you can collect in your journals, like your emotions, like anything you notice about maybe intuitive calls. I like to include things in my personal journal. I like to kind of at least account for them and sometimes include them in my trading journal, which is, did I sleep well? Am I eating well? Am I moving, getting exercise? Is there anything in my life that's distracting me? Some of these non-market related things that are very related to how you trade successfully, right? So you want to start to include some of these into intuitive calls in your journaling so that you can analyze them and see, hey, I made this gut call and it worked out great, or hey, I made this gut call and it didn't work out so well, and figure out how you can either improve it or maybe something you don't need to be doing. And then stress testing your decisions. Ask yourself, is this my experience talking or my emotion? And this is where you want to review some of these things and understand that you are using experience of charts and data to make these intuitive calls, and very much less emotion, like I'm gonna get you because you got me last time. You want to stay away from things like that. So, all right. So, in conclusion, trading your gut is trusting your gut is a skill, not a shortcut. So, it's something you have to develop. You develop it alongside strong analysis and performance review. That's a very important piece, and that's why it keeps coming up a lot, is because that review can show you if you're being effective with it or not. Self awareness in both psychology and risk profile is essential. So you have to understand maybe your psychology or maybe your risk profile does not work well with gut calls, with instinctive calls. And that's okay. You just have to know it. Blink shows the potential and pitfalls of instinct. It's a good book. I highly recommend reading it. Trading experience refines the edge of intuition. So build your instinct with your within your limits. Figure out those limits and build your instincts and practice. And this is how this can really help expand your trading abilities. And like I said at the beginning, how this all really came about was we were talking about how do you there are things that you wait, I wrote it down, and this again was Amelia. Just because you thought it doesn't mean you taught it. And this is for the teachers out there, but there are things that I do in my trading, in particular in my scalps and a little bit in my covered call explorer stuff where I just I know it and I don't always explain it well. And sometimes I explain it at a higher level and people might miss it, but it's intuition is what it is. It's all instinct. It's all previous experience that I have built up and I just know as much as you can. Obviously, it's always still a 50-50 coin flip, right? It can go against you. You have to understand that. But I know that AMD is going to pop, or whatever. Um, and I'll show you an example of this in a minute. We'll go to our last slide here. Of course, some fun slides. So yeah, success is just the tip of the iceberg. You gotta work on everything that's under the water, right? The persistence, the late nights, the discipline, the doubts, the risks. So you just want to account for as much of it as you can. And then of course, where to invest your money. I thought this one was kind of neat. You start off, you're doing your education, your side hustle, your health. Super important, your health. Stocks you like, maybe crypto you like. As you start to get into it more and grow your capital, you can get more into scaling up some things or getting into real estate. And then when you get to the point where you are growing your wealth and you want to retain your wealth, you kind of move away from growth stocks into value stocks. You look at dividend stocks, real estate's really good, index funds, and your health. Always look, your health's there twice. It should be in all three of them. Very, very important. So that is it for the slideshow portion of today's entertainment. And let's go to the charts. So we'll be looking at some candidates. If you got some things you want me to look at and maybe help you get another perspective on, throw them in the chat. In the meantime, what I want to do is, let's go back here. I'm going to pull this back up here. This is my morning scalps. And of course, AMD is on here. I want to show you something that happened with AMD last week. If I've got it, let's see. Um, let's do 5-day, 5 minute, and then I'm going to change the time frame to we'll do 15 days. We should be able to get that. So, was it here? Yeah. So that's 5 minutes. And was it, what was it? Hold on a second. I want to make sure I get this right before we go too far down the rabbit hole. Yeah, 20. Oh, that's 23rd. Yeah. Okay. So, yeah, it was the 24th. And it was this I did this trade right before we started our inner circle. So the market opened at 9:30 and we were in inner circle at 10 o'clock. And I was, let's see, I got in at 9:32. I got out in 9:39. I scaled out at 9:35, 9:37, and 9:39. But what happened was there was there news? Gosh, everything runs together. I think it was news. And but I saw this, and I saw what I saw was um let's go back. Is that right? No, that's wrong day. Sorry. We are there we go. So let's go back to that. There we go. So I saw overnight it had a little bit of a pop, and then it squeezed together. And this is part of my strategy. I'm looking for it to squeeze together and pop, but sometimes it pops early. And what I have noticed is that when it pops early, sometimes it keeps going and sometimes it falls, but it very rarely just goes sideways when it pops early like that. Now, it did start to go sideways here going into the market, but what I was doing is I was looking for something to either go up or down. And this was an instinct that I had. This was intuition that I had because I trade AMD all the time. And what this was is hugely successful trade. Boom, 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 boom. I'm out right here. I'm out right here. And this is 5 minutes. So let's go to uh, um, 2 minute. So you can see a little better. Is it this one? Nope. There it is. So you can see just boom, 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 boom. And there's where I got out. So it was all instinct. I can't teach this. See how this is it. This you got the very tight, and as it starts to move, bang. And this is one of those things that it's very hard to teach. It's easy to show after the fact, so you review it, but this is one of those things where the more you do something, the more you develop, and the more you follow the same stocks over and over and over again, you start to develop these instincts about them and how they react to different situations. So, anyway, I'm not sure I explained that really, really well, but I wanted to kind of illustrate that that was an example of how intuition gave me, where is it? A 216% rate of return in 7 minutes. And it's one of those things, you're not going to be able to do this tomorrow, but in another year or so you could be able to do this. You just got to keep going. So all right, so let's get off of that. Let's see. And Brenda's, what does it mean to round lot size? Starting November 3rd, the SEC is changing how lot size is calculated. It says it will change to tiered system. What is, I have no idea, Brenda. Um, let's go find out. That sounds like something that I would want to know. So let's go find out. Let's see. Oops. Hello. Nope. Sorry, I'm in my browser over here. So we've got SEC. Oh, wow. Okay. So Barry is saying the higher cost stocks will have lots of 400 rather than, oh, we'll have 40 rather than 100. Okay. SEC changing lot size calcs. Uh, the SEC is implementing changes to lot size calculations under Regulation NMS, introducing a tiered round lot sizes based on a stock's average closing price, effective November 2025. Let me bring this up so everybody can see what I'm reading in my Comet browser that I'm using for Perplexity. So for shares priced 0 to 250, round lot equals 100 shares. 250 to 1,000, a round lot equals 40 shares. 1,000 to 10,000, a round lot equals 10 shares, and above 10,000, a lot equals 1 share. So quotation sizes in market data will now be based on the actual number of shares rounded down to the nearest multiple of the new round lot size for each security. That's a mouthful. The changes aim to improve transparency for investors and better match trading conventions. How will lot size changes impact retail traders? So, quote visibility, ease of order entry, and transparency of market data. Retail investors will see more accurate bid, ask, and last sizes based directly on share counts instead of round lots. It sounds like this is stock trading. Um, Odd lot prices will be more visible on trading platforms. With more orders qualifying as round lots, spreads should compress. So they're looking to compress the bid ask spread, improving fill prices for retail traders on many high priced securities. However, the prevalence of odd lots means retail sized orders for some securities will still trade at as odd lots, and queue dynamics could change. Brokerages will update their platforms automatically, and retail traders do not need to make any changes. In short, the new rules are designed to make trading clearer and fairer for everyday investors, particularly in high priced stocks where previous lot size rules were out of sync with modern trading patterns. Okay. So yeah, this is about stock trading instead of options trading. So I'm not particularly worried about it because I do very little stock trading. Um, but yeah, you can go into your AI engine of choice or just the Google machine because a lot of their stuff comes from Gemini, which is their AI. Um, and if you want to go deeper on this to find out if it's going to affect you or not, but I know of no changes in contract sizes on options. So you still need 100 shares for one contract of an option. Yeah, no, I don't think so. That's not, let's see. Um, let's see how many shares will an option contract control. Okay, maybe it will. Let's see. Do not affect option contact tracked deliverables. So there you go. Um, Equity option contracts are governed by the OCC. Yeah, not the SEC. So there is no announced plans from the OCC or exchanges to align option contracts with the new SEC round lot tiers. So as long as you stick with options, this doesn't matter. I don't think it's going to affect your ability to trade in whatever size you want to, but what they're trying to do is compress the bid ask spread so that it is a little bit fairer, more fair um, um, playground for the retail trader. So yeah, thanks for bringing that up, Brenda. I was not aware of that, but mostly because I don't do a lot of stock stuff. But yeah, it could have affected options, so it's definitely something we want to check. And now that we've checked, we know that it won't affect our options, at least not for now. Um, but yeah, I would say that's gonna if something like that happens, we'll be paying closer attention to it. I'll probably notice it a lot sooner than this. So, all right, let's go. Let's pull this out of the way and go here and here. And yeah, so let's see. I don't see anybody asking. Uh-oh, what happened to my. Yep, there it is. I knew I was going to go. Well, let's look at the spies and the cues, even though Brenda hasn't asked for it yet. So we'll start with cues, and we're getting into. We need a new fib. Let's see. So with our big pops, we closed above the 618, and we didn't have a place to draw until now. It's going to take too long for my update to run, but from a daily standpoint, we're probably looking at something like that, which gives us 6 there, 7 there, which is about the average true range. So that's about right. It's a little small, but it's about right. Um, so there you go. So we're looking at what is that? 625.69 over there. So let's go here. Oh, actually, let's go to hello, this one. And what are the cues doing right now? So this is today. Yeah. So obviously we had the big gap up from that 69 or the 625. Um, gave about half of it back, got a bunch of it back, and then I was talking to Will right before we left the lab, and it's starting to trail off. So we're back down to 628. We've almost filled that gap, not quite. So yeah, and we're showing some weakness in the RSI right here. We're in a bearish bias, at least with the 8 and the 21. So yeah, for today, it looks like it might be moving down-ish. Going forward, obviously, so we got a big gap up and then coming back down. So we are likely to end up close to the same spot if it continues what it's been doing. Um, so you're looking at the 625 or 626 level right there. Let's go a little bigger. Um, and you've got a nice switchback there, but you've got your 8 sitting underneath. But this is what's good about what happened yesterday with the big move down. We got closer to the 8 because I like to use the 8 for a lot of my stops. So being close to the 8 and the 8 coming up to the fit towards the fib level gives us a possibility of a rank of 1. Not yet, but in the hopefully in the near future. So yeah, a pop off that 625, you got to run up to 631 or 626 up to 631 and then 637. If it rolls over, obviously you need to get past that 8, but you could move down to that 619. And actually, I need to move this up. That's my all-time high and my all-time high close. Um, so yeah, so that's, I mean, obviously there's going to be good opportunities, and right now, um, our RSI is strong, so that lends itself. Of course, this is a daily, and this is from yesterday, and that's where we had the big pop up. So we'll see what it does for the SPY. Very much the same. Technically, that did close. Where did that close? That closed 1 penny above the 618. So technically, that is a redraw. Since it is, We'll pull this back. Let's see. We'll grab there and go up to here. What is that? 653.17. So it's above that. So yeah, so that's the low. So we're looking at pretty much the same thing, except that with the SPY, we've gotten below the 236 close of yesterday. And what's it doing today? So today, again, big gap up, gave some back, up almost to the begin, up to where it gapped to. Yeah, it did get up to where it gapped to. No, it didn't, because it gapped up here, almost up to the gap, and then give a whole bunch of it away. And we have effectively closed the gap. We got a little bit of room right here, so it's not completely closed, but more or less. And now it's kind of going sideways a little bit. That's a nice little H right there. Um, but so that's sitting right at the 680, which is the 236. What do you know? It recognized the 236. So that's what we expect. So if it continues along that way today, then we would look at basically the same type trade for the SPY. If you're looking at swing trades, we've got an entry at 681. We've got an upside target at 685 and another at 690. Downside target is 676, but we want to be careful. Let me move this line out of the way. But we want to be careful of the 8. We got to get below the 8. We could have some resistance there, and that could cause a downside trade to go awry. So there you go. Always good to watch the SPYs and the Qs. They are awesome. Something else that I like to watch, since we're looking at the ETFs, is the IWM. Now, this is the Russell. The fib's still fine. Let's see, 3. Okay. So, as you can see, we're in a neutral bias. So that's a little bit different. But that's from yesterday. Let's see. So it's day trades and scalps only, right? We don't do swing trades on neutrals. But what's it doing? Let's take a look at what it's doing today. And we didn't get a huge gap on the IWM like we did on the SPY and the Qs. It little bitty gap, gave it all back plus a whole bunch more, then went way up and came back. Big arc. And we're a little bit lower than where we started. So with that in mind, was that 242? 244. Is that right? Yeah. So we've got our 244. So we're right there at the fib line. So we could see it go through this fib line and maybe have an end of day day trade to to the downside. So we could have an entry at the 244, and the downside target would be 240, which is pushing the limits of what Rob likes to do, but I'm very good with that. Nice 4-point move down is a possibility. So you just want to, if you're trading in the afternoons, you can watch for that. And then to finish them off, we'll just do the diamonds as well. Go back here and do our diamonds. Uh-oh. Oh, I didn't. I moved that fib back and I didn't redraw. Push these lines up out of the way real quick. So we had a redraw. I think I redrew this somewhere else, but it's basically going to be that. It's a little bit short. We've got, what is that? So we got less than $4 right there, but that's the ATR, so that's okay. We've got, see, we've got 5 here, so that's okay. So that fib is okay. What I do want to do is that is a slightly less than 40, and we're at 1 o'clock. So this will be the last one I'm going to do. But I do want to show you something real quick. There it is. I want to see what this fib does, which is the fib we've had on the others. And that is 36. And this is 37. So this is it's just a tiny bit bigger. You could do either one of those really. Um, since this should have been drawn further back, I'm going to use the earlier one, but as you can see, we're already at the 272. So we could be getting close to, if we keep moving up, we might have another redraw. But this one, coming back to the 8, but we're kind of in the middle of nowhere on the 8. The price pattern is right there at the fib, so that's nice. Could have, and this is, of course, yesterday's candle. So what are we looking at right now? What is that? 475. So we're looking at 474. So we're right there at the fib. We had a smaller gap up, give it all back, and kind of meander through the morning. That's a down-ish trend. So we're down below that fib line right now, but not by a lot. We're kind of where we started yesterday. So that might be a wait and see. But if you get your bounce, you've got to move down to the 8, but that's only about $3. So by the time you take 50 cents or a dollar off each side, that's not a lot of money to be made. But if you're doing it this afternoon, that's only 3 hours, right? It could be 3 minutes depending on how you trade. So yeah, there's some room there to wiggle. Longer term swing trade. We want it to get up above and stay up above this minus 136, and your next target would be from 475 would be 480. Actually, you know what? That's only 5. I'm gonna do what I usually don't do. I'm gonna get rid of those fibbits because we don't need them. That's 10. I take that back. Let's leave. We do need that one. That one's no. Well, look at me. Yeah, we don't need that one, but it's super close. Sometimes I leave them and sometimes I don't. This is where I differ a little bit from what Rob does. I'm going to put it back now that I look at it. That's not 5, that's 9. Um, yeah, we do need those fibbits there. So yeah, so we'll go from 475 up to the 480. If we want to go downside, we've got from 475 to 470, but the 8 moving average is in our way. So that makes it difficult. So yeah, let's call it at that. Hope everybody got some great nuggets out of today, and trade disciplined out there. We'll see you next time.